Right, good morning everyone. Let's get ready.
So that for the rest of your life?
All right. Friday's session in the States was not exactly wonderful. We had the S&P down 1.5%. Really kind of, the very end of the session, it started to look like we were going to turn back up and close toward the highs of the days, and they really just kind of puked it out the last 10 to 15 minutes. Never really a good sign. What's interesting and what we continue to see is a relative outperformance by the Nasdaq, and I think that that's really interesting for a couple of reasons. One, because it was the leader to the upside. We continue to see the Nasdaq being the dominant force when we were driving higher the whole time. And usually, when you would see a correction in markets, that leader would kind of be the leader to the downside as well. And we have seen that on some of the big down days, a couple of major down days early on, but since then it seems like Nasdaq's outperforming again, and I think that's a bit of a positive sign for the market, something maybe to keep an eye on going forward. Not a major revelation, but just something to pay attention to. We obviously had the non-farm payroll numbers on Friday, a hell of a lot of data points that came out along with it. What was important, I think, is not just, we did have a miss on the August non-farm payroll number. However, we had a major upward revision to the previous month. We had the unemployment rate, which also fell. We had a couple, average hourly earnings also increased. So, but between the entire announcement, I think, broadly it was at least in line. And I almost want to say a shade better than expectations. Because, like we said, you keep seeing these revisions upward. You always have a soft number out of September, and they've overshot it by an average of like 70,000 or 65,000 jobs annually on the estimate. So you just got to take that with a pinch of salt, I think. But all in all, I think the number was relatively solid. We did have the rig count fell again, but the first decline in only 7 weeks. So. Anyway, we have a public holiday today in the States. It's Labor Day. The great thing about this is it kind of marks the end of summer, and that means that most all the major fund managers and that sort of thing will be returning back from the Hamptons, but potentially to reposition themselves for the end of the year, and that could really mean that volumes could start to pick up a little bit in international markets, and we could start to see a little bit more. Well, we have been seeing a lot of volatility of late, but we could see some real positioning and some real big volume spikes over the next couple of weeks. All right, that is wrong, if I'm not mistaken. The Chinese composite, if the last I looked, it was up significantly. Sorry, let me just double check here. It is. It's actually down 1.5%. Wow. It was up 7%, down 3.5%, now down 1.5%. That's is that right? Oh, that's right. Okay, so we're down 1.5% right now, actually, in China. You can see there that markets all in all relatively flat. I mean, Shanghai was actually up a hell of a lot overnight at one point, and now obviously starting to fade. We got the Australian dollar, which continues to plummet. The Australian market is struggling so badly right now. I think that there's a real problem going on there, obviously being led from China, and so it's something that we're just going to have to keep a real close eye on. But I think until the picture changes for China, I think that we're going to be under intense pressure out of the Australian markets. Sorry, I'm just having a look now. That's obviously I wasn't updating that feed. We're actually up 4.5% in China as we speak. Anyway, let's get on into chart of the day. S&P 500 EPS. First 2 months of the quarter. I mean, this has been the real worrying thing. Is that the outlook on EPS has been really bad for a long time, and kind of getting gradually worse. I mean, year over year, we actually have a contraction in earnings, which isn't really the place that you want to be for a bull market unless there's something drastic that's going to change positively into the future, especially when you're trading as high of multiples as we had been in the States. And I think this is the really big problem that we're up against, is that the U.S. market is actually quite relatively expensive, especially when you look at the earnings figures. Now you got to remember, and I think the reason why the market's shaking this off to a large extent has been because you had so much dollar strength over the last 2 quarters. I think the dollar's up 12 to 15%, and that has buried these earnings, because you got to think of all the multinationals in the States. I mean, a lot of these companies, I would say most of them, don't even earn the majority of their earnings in the U.S. anymore. You think about Apples and the Microsofts and the Googles, and you can keep going down the line there, Facebooks, especially when you're looking at a lot of the big tech and a lot of the big industrials. You're so diversified now. General Electric, ExxonMobil. I mean, all of these guys are earning the bulk of their money offshore, and relative to dollars, it's just been hammered. So the economy is actually doing well in the States, but a lot of the earnings from these multinationals are struggling a little bit. So I think that's one thing that's really going to improve in the outlook, and that maybe no one's talking about at the moment, is that we've probably seen the broader move in the dollar. I think particularly that it's mostly done. If it's not done, it's 90% done, this dollar strength that we've seen over the last year and a half. And I think that over the next year, we'll potentially see a slight weakening in the dollar, which will obviously lend a real boost to earnings in a lot of these stocks, and therefore maybe support the market a little bit more as we get into the back half of the year. You start to see some of the earnings revisions, because of the weakening dollar, start to go to the upside, and this picture maybe flip back converted to a positive earnings picture in the States. Right. Corporate action today, we had AVI out with numbers this morning. It was like a slight miss on earnings and even slighter miss on revenue, but a touch of a beat in DVP share. We'll have to see how the market reacts. Sasol actually looks relatively solid, slightly better than guidance on that trading statement at 49.70. We came at 49.75. Revenue looks good. Divvy looks good. So I think that all in all, I think the market will probably receive this one positively today. It has had a nice rally of late, so we'll have to see. Also, I think what's worth talking about today is we had Glencore, which shares were halted in Hong Kong. That came out with announcements to cut. They're going to suspend the final dividend. They're going to save about 1.6 billion from that. And they're going to trim about 30 billion in debt. So there's quite a big announcement out of them, and you're really just seeing the entire sector make some massive moves, trying to get ahead of the Chinese slowdown and the drought that they've had in earnings because of the commodities prices dropping. Right. In terms of market data today, absolutely nothing. We had German industrial production, which was just a miss this morning, but very little to look at for the day today. We're going to get into a couple maps, not going to get too crazy here, just look at a couple of ones that I think are kind of rather more important than the others. Okay, so the first thing we're going to look at here this morning is going to be MISTA price. I know we've shown this a couple times. You can see it kind of there, but I'm going to go into a 30-minute. And it looks like we made a little bit of a rounded reversal here, potentially off of a little bit of resistance. So where we kind of wicked down there at 215, we bounced up there. We traded over the last 3 days. We've hit 215, and then Friday we really failed it, quite reasonably. We closed at 209.5, and I mean, obviously we're opening higher this morning. We're going to see a lot of stocks taking it with it this morning, but it really just feels like this one may have done what it's going to do. I genuinely believe that this thing will trade to sub 200. I don't think that the outlook is there to support this sort of multiple, which is a dramatic premium to what the rest of the sector is doing. All of a sudden, they don't look too impressive relative to the rest. They've got a lot of competition coming their way. This weak rand can't be doing good things for them, so just keep that in mind. Next one we're going to look at is Kumba. So I'll just show you here on a 30-minute. I've got a long here, so I've tried to kind of pick a little bit of a bottom, going with some of these other mining stocks squeezing for whatever reason. This one just couldn't kind of go with the rest. It really felt vulnerable on Friday. It was down about 7%. You can see here we dropped out the what looks like a bit of a bear flag. I'll look at this on a year chart here, and you can see if we just zoom it way forward, Definitely looks like a bit of a bear flag on the daily. And yeah, so I just think you got to be a little bit cautious, especially if it takes out the lows. And I think it opens the door. The lows down here around $81. I think if it takes those lows out, then it opens the door potentially for a move down to about $75. Next one and last one we'll show today is the Foschini Group. So you can see Foschini here popped up nicely above the 150 level. The market was under huge pressure on Friday and still managed to outperform the entire basket. We closed nicely in the auction at 152, breaking out above this 150 level, and definitely a little bit of an inverse head and shoulder going on here. You can see here left shoulder, right shoulder, and head here. So that'll give us a target up to about 100, low 160s, maybe 163, 165, something like that. Definitely could be a chip shot up to the 200-day moving average, which is trading it right now at 159 and 159.14. So just keep an eye on that. That True Worth really looked solid on Friday. The rest of the sector did not look great. I think that that retail is going to struggle a little bit, but these two definitely look like major outperformers at the moment. That's it for today, guys. Good luck.